So this just happened a couple days ago. I was at the gym getting swole, like I do, and I was talking to someone and the conversation of investing in Bitcoin came up, and the guy's like, did you know Bitcoin is about to go through like a split? Really? So you're telling me that because some people believe Bitcoin comes from nothing and that's why it's worth nothing, that instead of one Bitcoin, we're about to get 2 Bitcoins? Okay, I didn't really show him that one. He got to see one of these. So you got to see the cooler version. Smash the like button, because I don't carry coins in my pocket to the gym. That would be weird. But I do carry knowledge, and it was made very clear to me in that moment that most people probably don't know that Bitcoin is about to go through a very important process called the halving, that some people like to sometimes call the halvening. The halving is an event that happens every 4 years. And outside the approval of the spot Bitcoin ETFs, which happened this year, the halving is arguably the most anticipated and looked forward to event in all of Bitcoin. And the halving is set to happen next week around April 20th, when it will decrease the rate of inflation of Bitcoin. So to put it in layman's terms, there will be half as many Bitcoins created after the halving event takes place. Now, Satoshi, which is the pseudonym for the creator of Bitcoin, made this as part of Bitcoin's central design to counterbalance inflationary forces of fiat or government-issued money. So unlike dollars, which there's more and more of every single year, which creates inflation and rising prices, Bitcoin was designed to have the opposite effect by issuing less and less of itself every single year through a process called proof of work. So this video is going to be a tour de force of technical information to get you up to speed so you can understand exactly what this thing is, how it happens, why it happens, and most importantly, what happens to Bitcoin's price, because there's some really interesting things that start to happen around the halving event. So if that sounds nerdy and exciting enough, let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the Bitcoin. This video is going to get really technical, so if I put you to sleep, make sure you fall on the like button. That way we're both winners. So like I said, the halving is an event that's going to cut the rate of production of Bitcoin by half. In other words, it'll become twice as expensive to mine 1 Bitcoin. But why would they do that? Is the Bitcoin CEO out of control again? To understand why this happens, I have to explain how Bitcoins are created. Because unlike the central banking system, which has a group of people like Papa Jerome Powell who decides how much money gets added to the circulating supply, Bitcoins are created as a function of a consensus model. Now, a consensus model is just a fancy way of saying agreeing on the state of things, because we need to all agree how many Bitcoin you have and how many I have, because we can't just say, trust me bro, I have Bitcoins. That's a consensus model that's based on proof of words, which isn't very useful because anyone can say anything they want. So to agree on the state of things, computer nerds have come up with a couple really interesting ways to do that. Ethereum, for example, uses proof of stake, which means if you have enough money locked up, you can help validate transactions. Now, the deeper down the rabbit hole you go, the more you'll realize there's a lot of really cool ways to agree on the state of things, but Bitcoin uses a consensus model that's based on proof of work to solve complex mathematical equations, the answers to which are called this word, which I don't know how to pronounce. So I just say nonce. In nomine Patri et Filii nonce. No, I don't think that's how you pronounce it, unless you're Italian. I think it's pronounced nonce. A number used only once. Now, the downside of proof of work is that it uses a lot of electricity, it's slow, and it's not super efficient. But the trade-off is that it's extremely secure, which is why it's such a good fit for the application of value or money that makes Bitcoin. The question though is, how do you incentivize people to work on solving these puzzles? Like, why would anyone buy these expensive machines that are loud and hot and use a lot of electricity? And the answer is block rewards. Now, a block and all of its rewards get created on Bitcoin every 10 minutes. So think of it like a bus stop. And every 10 minutes, a bus comes along and then takes off, and another one takes its place. Now, if you want to get on the bus, in other words, if you want your transaction to get included on the blockchain, you have to bribe the bus driver. But if you don't bribe him enough money, you might get stuck at the bus stop waiting for the next bus. And that means your transaction gets stuck in what's called the mempool, which can take several days. But what's cool is you can actually check right now for yourself how often people are transacting on the blockchain. Right now, it's a little over 3,000 transactions for every 10 minutes. And if you zoom out and you look at the longer time frame, you'll actually be able to see that Bitcoin transactions have grown a lot since it was first created. Today, there's almost 1 billion transactions on the blockchain, and that's how many times people have used Bitcoin. So all in all, just remember that we're making 1 block for every 10 minutes. That's 6 blocks per hour times 24 hours in a day equals 144 blocks per day. That number is constant and it will never change. What's not constant and what was designed to change since the birth of Bitcoin was the block reward. And that happens every 4 years, or exactly every 210,000 blocks. And here's how much obscene amount of money Bitcoin pays its miners to keep Bitcoin safe. Right now, each block rewards miners 6.25 Bitcoins for their work, and at today's prices of 70,000 a Bitcoin, that's $437,500 per block. So in total, that's 900 Bitcoins per day at 70,000 a Bitcoin is $63 million every single day that's paid out to the Bitcoin miners. But all of that is about to change. Now, before I explain that, I just want to show you some more interesting numbers, because while you were watching this video, there were more than 10 cases of identity theft reported nationwide. And that's because there's an identity theft case every 22 seconds with a median loss of $500 per case. And that means there's over $5,000 that has already vanished. And the people we can partially thank for that are data brokers, people that sell your information on the internet. Data brokers are everywhere, compiling your personal info into profiles that can risk your privacy, leading to unwanted situations like identity theft or even stalking. And that's time and stress that most people could use for literally anything else. So to protect you and your family, I want to introduce to you the sponsor of today's video, Delete Me. After signing up and providing my personal details, which was super easy, Delete Me went on to work as my agent to remove sensitive data from all the data brokers, and the results were shocking. Delete Me swept through hundreds of these data brokers to remove my personal information, and it's reassuring to know that I have experts continuously working on my behalf to protect me, and I chose Delete Me because of their commitment to privacy. The regular transparent reports show me exactly where my data was found and removed, plus their customer service is always there for me in case I have any concerns. I highly recommend you check out Delete Me to keep your and your family's data safe, and Delete Me is offering 20% off for new subscribers of all US consumer plans at joindeleteme.com/Andrei20. Thank you, Delete Me, for sponsoring this segment of the video, and now let's get back to it. So here's a quick history of all the halvings that have happened. In 2012, we got the first one where the block reward was cut from 50 down to 25, or 3,600 coins per day. Then in 2016, we got the second one, where it was cut from 25 down to 12.5, or 1,800 coins per day. And in 2020, we got the current rate of production, which is now 900 coins per day. And on April 20th, around there, 2024, it'll get cut in half again to 450 coins per day, or 3.125 coins per block. Now, at that moment, 4 very interesting things start to happen. The first interesting thing is that it becomes twice as expensive for miners to secure the network. So imagine your boss calls you up and he's like, "I'll make you an offer you can't refuse. You continue coming to work and I'll pay you 50% less for doing the exact same amount of work as you did before." Like 50% of people would at least quit on the spot. And if that happens to Bitcoin, like it's about to on April 20th, what happens is only the most efficient miners stay on the network. And that's because it doesn't make sense to continue mining if the cost of hardware and electricity is higher than the cost of Bitcoin. So when those miners leave, the difficulty to solve the blocks automatically adjusts downward by design. It just depends on the hashing power. So when there's more people, difficulty increases. When there's less people, difficulty adjusts downwards. Now, what happens next is this. The Bitcoin miners that stay on, that continue mining, start to sell their Bitcoin at a slower pace, and they wait until there's an equilibrium between the market price of a Bitcoin and the price to mine a Bitcoin. So the question is, how much does it cost to mine a Bitcoin today? And estimates right now show that it's $40,000 in electricity and hardware cost. But after the halving on April 20th, estimates say it'll double to around $80,000 a coin. Now, the market price of Bitcoin and the cost to mine a Bitcoin don't always reach that equilibrium right away, but eventually the price of Bitcoin tends to exceed the cost of mining. Right now, that's exactly where we are. If it costs $40,000 to mine it, but it's $70,000 in market price, some people look at that and say, well, that's interesting. Maybe on a fundamental level, Bitcoin is slightly overvalued. The people that are holding on to it believe that it'll be worth a lot more, so it's worth holding on and buying even at these higher prices. So that's the first interesting thing that happens. Here's the second. After the halving, Bitcoin becomes more rare than gold as measured by something called the stock to flow. But all the stock to flow really measures is how many years it would take to recreate the current supply of something. So let me give you an example. If we take gold and we take 244,000 metric tons, which is gold's stock, in other words, how much gold there is in the existence in the world today according to the USGS, and we divide it by the flow, which is 2.5 to 3,000 tons per year, which is how much we're mining every year of it, which let's say the average is 2,750. We divide 244,000 by 2,750 to get 88.7 years. That's how long it would take to recreate all the gold we have in the world today. But let's compare it to Bitcoin. If we take Bitcoin's stock, which is the circulating supply, which right now is about 19.5 million, and we divide it by the flow, in other words, how many Bitcoins we'll make per year after the halving, which will be 164,250, and we get 118.7 years. So it's gonna take a lot longer to recreate all of the Bitcoin we have today than all the gold we have today. So by that metric, you can say Bitcoin becomes more rare than gold. Now, a third very interesting thing that happens is that we're gonna mine only 450 Bitcoins per day. And why that number is interesting is because the ETFs from a company like BlackRock just bought over 10,000 Bitcoins last week, and we're gonna mine a little over 3,000 a week. So the demand from one ETF issuer like BlackRock is outpacing demand, and that's just one ETF issuer. There's many others, and there's all the people that are investing into Bitcoin outside of the ETFs. So again, more demand than there's supply, at least for now. Now, the fourth interesting thing that'll happen is what history shows will happen to Bitcoin's price. On-chain analysis reveals that Bitcoin's price could actually go way up or it could go down. You thought I had the answers. I do magic tricks and I make dumb jokes in my videos. I have no idea what's gonna happen, but the truth is no one knows. But I can show you data of what could happen based on what's happened in the past. For example, Bitcoin can crash several days before, like in 2020 when it crashed 17% a few days before the halving. But it could also crash several days after, like it did in 2016 when it went down 29%. Or something completely new will happen, and it already has. Because this is the first time in Bitcoin's history when the price has reached an all-time high before the halving has even taken place. That has never happened before. And some people will look at that and say, well, that just means the next bull run will be that much bigger. Other people that are skeptical say, well, maybe that's the market getting smarter. It's anticipating what will happen, so when it does, the price will go down because it's gonna sell off. The truth is, no one knows because there's no clear pattern except for one. 12 to 18 months after the halving, Bitcoin's price tends to go up substantially. Now, how high could it go is a separate video that I made somewhere up here where you can watch with Giovanni Sanastasi, who's an astrophysicist who created this really cool formula that's so far been really accurate. But again, no one knows for sure. Here's what I do know though. In 2017, I created this Bitcoin art display puzzle box with 2 Bitcoin playing cards inside of it. The idea is to solve the block by twisting 8 special keys and having them face the same direction, doing proof of work. Now, once the block is solved, by twisting each key into this direction, you can actually split the block into 2 halves and collect your Bitcoin puzzle playing cards. Now, the cards themselves, which are beautifully designed, also contain a hidden secret. The secret is a binary code that allows you to know the identity of every single card without anyone else knowing what it is. And that was a hidden tribute to the pseudo-privacy of Bitcoin's blockchain because it's actually transparent, a public ledger for anyone to see. We even made a special watch that has an inscription on the inside of the watch strap, which was the solution to the puzzle. And the idea there is that it was your private key that gave you access to your Bitcoins inside your wallet. But that's the watch I'm wearing now with the private key. And there are 8 keys to this Bitcoin puzzle, which means that it can be in 256 different states, which is also a tribute to the SHA-256 cryptographic algorithm that secures the Bitcoin network. Now, this was a brainchild of mine in 2017, and it went live in 2018 on Kickstarter at one of the lowest moments in my life. And it's kind of bittersweet looking back at all of this now, today, at all the risks and decisions that I made to get to this point. All in all, we raised a couple $100,000 on Kickstarter back then, and everyone got their puzzles and their cards. Unfortunately, this project is not for sale. I have like 8 of these boxes left at my house, but if there's enough interest, I might be able to bring it back. Unfortunately, I don't think it's gonna happen because I'll need several thousand people just to make it worth it and probably break even. But if you're some Bitcoin baller or a crypto CEO and you're like, I wanna own this idea, I wanna distribute it to all my employees, let me know and we'll work something out. I just think it's such a cool way to introduce people to Bitcoin and the idea of blockchain in such a cool visual, hands-on kind of way. Pay really close attention to what's gonna happen next week. Personally, I've invested my money into Bitcoin long before all of this, but I kind of hope it goes down because I'll be buying more. But I'd love to know what you think's gonna happen next week. Let me know down in the comments, and as always, I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks, links are down below, and then go track them automatically with the spreadsheet link down below in my Patreon. Love you, thank you so much for watching this video. I'd love to see you back here on Monday and Friday, sometimes a Wednesday. See you soon, bye-bye.